Hello, today we're going to do just a quick overview and a recap on all the jumbo mortgage requirements for home buyers in the Bay Area. Of course, if you have questions, please reach out to us 7 days a week by calling or just visit us at jumbomortgagesource.com. Okay, so the first thing we want to determine, as always, is what exactly is a jumbo mortgage. And how that's determined for home buyers in the Bay Area. Basically, a jumbo mortgage is going to be any loan amount that exceeds the basic standard conforming loan limits. And that can change depending on what county the property is located in. And again, keep in mind that this is based on not the purchase price of the home, but the actual finalized loan amount. And this will vary depending on, again, what county you're located in. As we can see here from the chart, San Francisco, most of the surrounding counties, Santa Clara's, those counties, the limits for the conforming loans, one unit properties go up to 1,149,825. And then it goes down slightly for some of the other counties like Napa, slightly lower, Sonoma slightly lower. Again, the Solano, that is the base conforming loan limit only in that county for 766,550. Again, this is based on a one unit property and the final finance loan amount. And this is also based on the current 2024 limits. These limits do commonly they'll change at the end of each year. They've actually been increasing for the last five or six consecutive years, and whether or not they're going to go up again for 2025. They could go up a little bit, probably not too much, but again, this is just based on 2024. So again, any loan amount that exceeds this would be a jumbo loan. Okay, and then this is also a breakdown for any multi-unit properties. You can see that these loan limits for the conforming loans, they go even higher if you have a 2, 3, or 4 unit property, like a duplex or something like that. The limits do go up and they increase, again, for multi-unit properties. Okay, so once you determine if a jumbo loan is going to be required, then we want to go over just some of the basics. There are financing options available up to 95% financing for eligible home buyers. These programs do, just like really most of the conforming loans, they're going to require complete income and asset documentation. Um, Credit scores, credit requirements, they can fluctuate over time, but generally a 680 credit score would be required for the maximum 95% financing. There are loan limits that are in place depending on the down payment. We're going to look at that in the next slide. Um, Buyers with lower credit scores, again, that are below 680, they still do have financing options available with a higher 10 or maybe 15% down payment. The property types, again, all standard single family homes, townhomes, and really most condominiums are eligible. Transaction types, they include purchase, rate and term, and cash out refinances. Cash out refinances, though, are limited to generally only 90% loan to value. And then the available terms, again, just like any standard conventional loan, really all your common fixed rate terms and a variety of different adjustable rate options. Most of the options are going to be fully amortized with principal and interest. There are limited interest only options available too, depending on the qualifications of the buyer, the down payment, the loan amount, and other factors. Most of these options, even the options that exceed 80% loan to value, so buyers that are putting down 5, 10% down payment, there are options that are available that they do not require monthly mortgage insurance or PMI. It's a common misconception where if you put less than 20% down, you're going to have the monthly mortgage insurance or PMI, but that doesn't apply. There are options with piggyback and combo loans especially that will get around the monthly mortgage insurance requirements that are commonly found on conventional loans. Okay, so some of the down payment and loan limits, again, 95% finance. These loan limits, they vary greatly on depending on the county that you're located in. Some of the counties around San Francisco, like San Francisco County, where the conventional loan limit is the highest. Well, the jumbo loan also will be the highest in those areas as well. But generally for 95% financing in the highest cost counties, the limit's going to be around 1.7 uh, million for that. And it's always a good idea to refer back to our website because these loan limit requirements, they can and do change. Um, 90% financing for those home buyers that are putting down a little bit more, they have greater flexibility in their loan limits. They can go up to 2.5 and sometimes 3 million, again, depending on the county. And then there's other financing options that are available. Buyers that are putting down even more, they have options available, 15%, 20% down payment. There's plenty of options that are available that beyond 4 million. Other jumbo financing options include second homes, vacation homes. Those are also eligible, but not to 95% financing. Those will generally be limited to 90%. Um, in mortgage payment reserves, that is basically the amount of liquid or non-liquid assets that a homebuyer has remaining after they've made their down payment and paid for their closing costs. Lenders commonly require payment reserves. And that can vary. 3 months of payment reserves, maybe for lower loan amounts. Higher loan amounts, they can require up to 9, maybe even 12 months of payment reserves that just need to be documented and shown. And again, the reserve requirements fluctuate greatly depending on the loan amount. But the good thing is here is it's not required to be a liquid account. So retirement accounts like 401k or IRA accounts, those satisfy reserve requirements. Okay, and some of the other programs we want to highlight here is options for self-employed home buyers. This includes bank statement qualifying loans, where business owners basically qualify based on a 12 or 24-month average of their actual business bank deposits. That's how the income is formulated for qualifying. Many business owners have challenges when it comes to documenting their true income with tax returns and things of that nature. So this is a good option for home buyers. Again, if you're self-employed, this is a good option to be able to qualify based on the actual business bank deposits. And then, of course, VA jumbo loans. Many veterans are unaware that VA also has plenty of options that are available for higher loan amounts, but up to $2 million for 100% financing. And even larger loan amounts up to 4 million are available with a slight down payment. This is a fantastic option if you are a veteran that has the qualifications and entitlement and all the eligibility factors are met as far as really just like a standard VA loan when it comes to debt to income ratio limits and credit requirements. But if you do fit in that, these VA jumbo loans really are a fantastic option. Again, many vets are completely unaware that this option does exist. That's a basic recap of all the options. Again, please refer back to the website for the latest and most up-to-date requirements. And contact us 7 days a week with any questions by calling 800-962-0677. Thank you.